Hi everyone, good morning and welcome to my morning report analysis videos on Wednesday the 5th of July with me, Rich Paramark, analyst at Handtech Markets. We've basically got a flat morning, nothing doing in Forex, nothing doing in equities, and it really is a big consolidation day. Now, why are we seeing this? I think it's something to do with the fact that we had the Fed minutes last night, which created a bit of uncertainty, really. Uncertainty with regards to not only inflation and the views on inflation on the committee and whether it's going to start to pick up again sustainably. You also had uncertainty with regard to the balance sheet reduction and exactly when that's going to start. You had, I think the word was several of the committee members looking for balance sheet reduction to begin in the next few months, but then there were also a few on the committee that thought that it should happen later on in the year. So there is a bit of uncertainty surrounding this balance sheet reduction. And whether it's going to be September, whether it's now possibly even December, or even into next year. So that has sort of halted a bit of that dollar rally that we'd seen. The Treasury yields sort of holding basically flat on the 2-year and the 10-year in the last sort of day or so. And that's beginning to sort of impact on the dollar, which is again had that rally, but it started to settle down a bit. And it started to move a little bit more sideways. Nothing really doing in terms of direction today. Now, we had a sharp sell-off on the oil price yesterday. Big sharp sell-off, and that came as OPEC oil supplies were significantly were increased actually, or production levels were increased by 450,000 barrels on the month. So it doesn't look as though this production cut that OPEC agreed is really doing a great deal, to be honest, but there we go. What we are seeing is basically the oil price, which has fallen yesterday, but it has actually bounced back today by just over 1%, but it'll be interesting to see what impact that big decline has that we saw yesterday. But pretty much across the board, Forex majors all flat, equity markets mildly sort of ticking higher. On the DAX and the FTSE, nothing really in terms of direction, and gold sort of just unwinding a bit. I'll take you through these charts in a bit, but generally speaking, pretty much waiting, I think, for the data. And then we've got a lot of data today, a lot of US-based data, ADP, weekly jobless claims, and ISM non-manufacturing, and that all comes ahead of tomorrow's comes ahead of tomorrow's non-farm payrolls. So we've got this US data today. ADP 185 down from 253. Now 253 came despite the fact non-farm payrolls was 138 last month. So the market's probably going to give that 185 as a bit of a sort of a wide sort of arm. What would be the term? Pinch of salt, I think would be the case, depending on whether it's sort of beat or missed estimates on that. Jobless claims basically have been flat. Around that 240, 250 level for weeks now. And we've got ISM non-manufacturing PMI, which is due out at 3 o'clock. And if I can find the chart, is 56.5, so that would be 2 months in a row down, but to be honest, it's not too bad there as a number. But there has been a trend of the service sector PMI just rolling over a little bit, and that would sort of be in line with that trend that we saw yesterday with the European data. Now, my chart of the day is a look at the dollar CAD. Really, dollar CAD had a big breakdown last week. Big support broken at one spot 30 big figure. And that that old support has become resistance this week. Time and time again, throughout the candles this week, we've seen that coming in as resistance, being sold off. And again, we saw that big pressure on 130 and in front of the Fed minutes, but then it fell into the close, and that sort of dropping away does not sort of bode all that well. But that is clearly a resistance that the market is now paying a lot of attention to, 130 big figure. And you can see here on the hourly chart where you've seen sort of several attempts to sort of get through that 130 have failed. Now you've got initial resistance, I suppose, around 130.15, but the key resistance, I suppose, would be taken as 30.43 on a near-term basis. It looked yesterday as though the market was becoming increasingly sort of positive on in terms of a potential recovery, but it fell away after those Fed minutes, and it certainly looks like it's sort of dropping back again, putting pressure to the downside. So if it fell below that Tuesday low, 129.10, you're sort of reopening the big downside moves again towards that September low of 28.18 and the August low of 27.60. So it still is in a bear phase, and you'd still point towards the daily momentum indicators negatively configured, and that resistance at 130 figure is intact. So whilst that remains the case, you're still sort of playing it to the downside, I think. But you'd probably would, even though 130 big figure is a resistance that the market is clearly looking at, and if you broke out above it, I'd still say that rallies are a chance to sell because you're in this downtrend phase and you're trading below all the moving averages, and it still looks fairly much as though that the CAD is the dominant factor in this chart. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.